What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about meta platforms, and I was reading an article today, and I believe that some news out of Europe could change everything moving forward for Meta. So what we are going to do in this video is we are going to take a look at that news. We're going to go over Meta's earnings and where they are headed in the future. We're going to take a look at their valuation and potential price targets. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Meta's chart this year is absolutely insane. If we look here today, the stock has moved up almost 2%. Over the last month, up over 5%. And if we look year to date, the stock is up an outstanding 130%. And what's even crazier with it is the consistency that we could see that it's moved up with. We could see that month over month, it just continues to move up. And there are some small parts where the stock is leveled out. However, it just continues to move up in a straight line. And even a year ago, we could see that the stock is up almost 80%. And from the lows back in November to where the stock is trading at now, we could see that it has moved up over 220%. Here we have the article that I was reading here today, and it is titled, Meta Platforms is suddenly trying to enter one of the most valuable duopolies on the planet. And that business is the business of apps. 95% of the app economy is held by just two companies, Apple and Alphabet. That is the Apple App Store and the Google Play App Store for Android phones. However, in October, the EU published two new pieces of legislation, the Digital Services Act and the Digital Markets Act. And with these new pieces of legislation, Apple and Alphabet may not be able to funnel mobile users towards their native app stores. Users may find it increasingly simple to use alternative app stores or simply bypass the stores altogether by downloading an app directly from an ad. And Meta plans to capitalize on this by experimenting with some app developers on its Facebook platform later this year. The experiment will be on devices powered by Android operating system, which is connected to Alphabet's Google Play Store. App developers will be able to run ads on Facebook and allow downloads with a single click without consumers being redirected to the Google Play Store. And this could be massive for Meta for a couple of reasons. The first being that they are going to help a lot of app developers avoid the hefty fees that are imposed against them by the Apple App Store as well as the Google Play Store. The second reason this is massive for Meta is because these app developers will now be spending advertising dollars on their platform. Not only that, but they will also become more familiar with Meta platforms and how they operate. And ultimately, what I believe Meta wants to do with this is they want to develop their own app store in the metaverse. And we have seen this already as Meta has really emphasized building out their metaverse platform and is reporting that they are looking to take a 47.5% cut of digital asset sales. In my opinion, they need to bring this down because this is way more than what we see Apple and Alphabet taking for their app store fees. And if Meta wants to be competitive in this platform, they need to drop their fees significantly and really encourage new apps to come to the platform. Interestingly enough, Microsoft is also getting into this atmosphere. We can see that in March, the head of Microsoft Gaming, Phil Spencer, referenced the EU's new legislation saying that the company intends to launch a mobile app store for video games. And this aligns very well with Microsoft's recent attempt to acquire Activision Blizzard. We've seen a lot of app developers getting really upset with the Apple App Store for a couple of reasons. The biggest, though, being the amount of fees that Apple has against these businesses. We saw this with Fortnite, where they actually offered their in-game currency for cheaper on their website than it was on the Apple App Store, and Apple got upset and kicked Fortnite off of the platform. There was back and forth on this, but at the end of the day, Apple really came out on top. We also saw something similar with Meta, where Apple changed their privacy settings, and this had a huge effect on Meta's business. So we see from these app developers really the want to get away from these app stores and the amount of control that they have over their businesses. Right now, Apple has a take rate of 30%, and they are managing 975 million paid subscriptions. So this is a huge market that Microsoft and Meta can really get into and capitalize on. Right now, Meta is still trading at a relatively low valuation. When we look at their forward P ratio, they're sitting around at 23.7. If we look just a few months ago, they were sitting at an 11.31, and that was absolutely a ridiculously low valuation. In my opinion, though, Meta should trade anywhere from a 25 to 30 forward P ratio. And in terms of earnings, we see a lot of growth ahead of Meta. When we look at the average estimate for 2023, we could see that they are projecting $11.68. The low estimate is $8.72, and the high estimate is $13.68. For 2024, analysts have an average EPS estimate of $14.56, a low EPS estimate of $9.80, and a high estimate of $17.58. For the 2023 numbers, we could see we have the earnings listed out here, and based off these earnings, we can calculate the forward P ratio. So right now, with the average estimate of $11.68, the forward P ratio is sitting at 24.57. For $8.72, it's sitting at 32.91, and for $13.68, it's sitting at 20.98. So based off the average EPS estimate, we can see again that the current P ratio is sitting around 24.57. If we assume that Meta should trade anywhere from a 25 to 30 forward P ratio, we could see that the price target for the low end comes in at $292, which is basically in line with where the stock is trading at right now, all the way up to $350.40, which would be a 22% move to the upside. For the low EPS estimate, we could see again that the forward P ratio is sitting at 32.91, and based off a potential range of 25 to 30 forward P ratio, we would see a price target of anywhere from $218 to $261, which would be anywhere from an 8.8% move down to a 24% move down. And for the high EPS estimate, again, we have a forward P ratio of 20.98. For a potential P ratio of 25 to 30, we would see the stock trade anywhere from $342, which would be a 19% move up from the current stock price, to $410, which would be a 43% move up from the current price. In my opinion, Meta right now is making all of the right business moves. They are developing hardware where they can create their own app store and basically get into two markets at once, which we have seen from Apple, and we have seen Apple have a lot of success with, right? We have seen them build out their hardware business as well as their app store business, and that has worked very, very well for Apple. And I think Meta sees the same thing, and they see the issues that Apple has caused them with their own apps, and they want to get away from the Apple App Store. And I think Meta is doing an excellent job of capitalizing on that. So personally, I am not buying any more Meta because I've built out a great position over the last year that I am very happy with my average cost basis on my shares. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.